All right. My name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about a 1031 exchange strategy that I had discussed with a potential client. And I guess as I was thinking about it, I said, you know what, this could be useful to a lot of people that might be in this situation. So this particular client, it had some properties and they built a portfolio of properties over a long period of time. And especially at the time of doing this video, prices have greatly appreciated. So I'm doing this video. It's now May of 2024. And over the last 3, 4 years or so, ever since the pandemic, real estate prices have skyrocketed. They're cooling a little bit, but if you look at what the prices were in most major cities or surrounding areas, prices are considerably higher. But point being, both that have held on to real estate for quite some time, they have realized a great amount of appreciation. So this particular client had a number of properties and they had appreciated greatly. And they were older in age and pretty much near the retirement age. And they're looking to cash out, essentially use the portfolio of properties as their nest egg. And so with that, they want to preserve as much capital as possible when going to sell the properties. So that's what they were faced with. The properties were paid off and there was a great amount of appreciation and they were worried about incurring a ton of capital gains tax. They were pretty good with cash flow. And the properties were pretty good with cash flowing, but they just didn't want to be bothered with the landlording and the minute they were self-managed. And as they're nearing retirement age, they just didn't want to be bothered with the duties of landlording. So the plan was to sell, cash out the money and go and live a retired life. So we wanted to save as much as possible with taxes. I had brought up that they would consider doing a 1031 exchange. And I've explained that before where an exchange is essentially a tax-free transaction involving real estate where you're selling one property, buying another, and you can defer the gains on the taxes. But to keep things simple, if let's say that you buy a property that's 500,000 and it appreciates to $1 million, and you can essentially sell that property, get that $1 million, and go buy another property for $1 million, and you don't pay the taxes, right? So you had a 500,000 gain, and it's a completely tax-free transaction. Now, the gain or the taxes are deferred. It's not lost forever, at least by the letter of the law. If you were to sell that property later on, the new property, and you didn't do anything with it, you took the money out, then at that point, you would pay the gain on the 500. So it's a deferral until you actually get out of owning properties altogether, or if you pass away. So it's a great tool to defer gains. And if done properly, properties properly, say to your loved ones, it could be a great way to escape taxes altogether on real estate appreciation. So I brought this up and see if it was something that they wanted to consider. But the main thing here was they didn't want to be bothered with landlording anymore. All right. So if you trade one property for another, you're still with the burden of managing that property. So what I had suggested, and maybe this might not be as known to many people, was that you can exchange either way for multiple properties. So in this particular instance, the client had a number of single family homes. They don't want to be bothered with it. And I can understand that can get pretty challenging to do the landlording with all these different properties that you have to run around to. However, sure, it's a lot easier to be a landlord at one larger property. And this is where things got interesting, because you can do with the suggestion I made is that you can sell multiple properties and exchange it for one large property, because it's a lot easier to manage one large property than multiple small properties. At that point, you can probably bring in, if you have a larger property, you can bring in a professional and a manager. So that would also eliminate the burden of you having to do the landlording on all these different properties, do a 1031 exchange, sell these multiple properties, right? Take all of that capital, purchase one property, and get that property professionally managed. So that takes the burden off landlord. You are now into one property that can be managed. And then the beautiful thing is, as far as getting your cash, once you do the exchange, just simply do a cash out refi. So do a cash out refi, and cash out refis are tax-free transactions. Now, granted, you're going to have to leave some equity in for the property, but the idea is that with the cash out refi, that you have your rents cover what that mortgage payment is going to be. You now get to receive a good portion of those proceeds that you would have received had you sold them. Just do a refi out, and you have your money free and clear. So if you're sitting on a number of properties and on a ton of equity, and this may be a good way to extract that money tax-free, but then also remove the burden of having to be a landlord. So hop into larger buildings, get them professionally managed, and do a refi out. Because in this particular instance, the client owned the houses free and clear. So they were sitting on a ton of equity. And I would imagine that you had a lot of baby boomers, because that's what the client was. And there's a lot of that might be in this particular situation where they might have invested in real estate decades ago and have realized a ton of appreciation. So this could be a good way to pull the equity out, relatively tax-free, still get to keep the asset, where maybe you can set it up to pass it on to your heirs. So thought to consider, and I figured I'd share with you because the client walked away relatively pleased, and it seemed like something that they wanted to implement. And yeah, if you have any more questions about this particular topic or any other tax or account related questions, feel free to give me a call. All right, that's all for now, and I'll talk.